Hello, everybody, and welcome to Chart Request Live. This is the show where you bring the tickers and I bring the charts. I'm flying solo today. All of my colleagues are very busy, and yeah, let's get to it. Of course, if you want to see your ticker first, we have a mailbag. You can send us an email at questions@stockmarketmedia.com. Um, we had a very busy weekend just now. It was Easter weekend. I seem to have hurt my arm playing baseball with my little cousin. My elbow is killing me today. I shouldn't be having this joint pain at such a young age, but man, I just feel like an old man today in pain. So that's going on in my life. I hope everybody else had a good holiday weekend. It was kind of neat to have Easter and 420 on the same day. So there's a little bit of something for everybody. I hope everybody had a good time. I was watching some NBA playoff basketball this weekend. The Oklahoma City Thunder, boy, has that been fun. I'm a huge OKC Thunder fan, and they are looking great. I like to track the poly market. They have odds for who will win the NBA Finals, and the Oklahoma City Thunder are actually at the top of the list. They are currently favored with a 35% chance to win, and then you have the Boston Celtics at like a 30% chance. So I'm very excited for the NBA playoffs. I see some people in the chat chiming in. Chef Aaron, maybe he's an Oklahoma City fan too. We've got Wavy in the chat. I appreciate you guys showing up. Here's what I'm watching today. This is front and center for me. It usually is, one of the first things I look at every morning is bond yields and currency markets. I'm not really a bond trader. I'm not really a currency trader, but the amount of information we can glean from these markets is invaluable to my process, and I hope I can show you why. Because we live in the United States here. Not everybody. Mark Hines, Rock Chalk, that's right. I'm not sure if everybody in the chat lives in the United States, but for me personally, I'm trading in dollars. So if the dollar is going down, that should, in theory, it's certainly not the case today for speculative tech stocks and the like, but a weaker dollar should help risk assets rise in price because all of the assets I'm trading are priced in dollars. So if the denominator is falling, that should help the numerator, unless the numerator is falling at a faster rate than the denominator, which seems to be the case right now for speculative tech for sure. But one area that really has enjoyed the weaker dollar recently has been precious metals, and in particular, gold futures. Let's pull up the gold futures chart. I know we had a question in the mailbag about precious metals, so I'll address that shortly. But gold futures, boy, has this been an awesome uptrend. So here's the very long-term chart. A big base into another big base, and here we are. As you can see, this last bull market lasted about 10 years. It went from 2001 to 2011, and this new bull market started in 2016. So if history is any guide, this bull market could be nearing its end, because the last one lasted a decade, and next year will be the 1 decade mark for this bull market, if you base it on this 2016 low. But this certainly has been awesome, and it's definitely enjoyed a weaker dollar recently. As you can see, it started the year with this continuation pattern. It resolved that, and let's measure it, see how far we've gone this year. So far this year, we're up about 30% in the gold futures. So that has been far better than something like the S&P, which is down, I don't know at this point, close to 20%. from the peak. And let's get to our question from the mailbag, which came from Jonathan. Shout out Jonathan. He wanted to see the silver to gold ratio. So let's look at the silver futures in the numerator and then the gold futures in the denominator. And this ratio, as you can see, has been getting hammered lately. I think it's trading at fresh 4-year lows. Let's call it 5 years, actually. Lowest since May of 2020, and we're now in April of 2025, so just a little bit short of 5 years. And as you can see, this ratio was range bound for some time. You got this key pivot low in 2022, and we were above it until just recently. But as you can see, it's just been a very range-bound market. You bottom in 2020, in the late 2022, peak a few months later, then you fall back for a few months and just chop. And now the market seems to pretty decisively resolving lower. So this ratio really, for me at least, is very valuable for the intermarket information it gives us. In true precious metal bull markets, you see silver dramatically outperform gold. That has not been the case at all. We've actually seen the exact opposite this entire precious metal bull market. It's pretty much just been a gold bull market. You haven't seen much from platinum. You haven't seen much from palladium. Silver is probably the most constructive looking out of those three, but boy, really taking it on the chin relative to gold. So this does not bode well for gold bugs. Just in general, if you're a gold bull, you want to see silver go up at least. You want to see it outperform gold in a perfect world, but you can't see silver falling the way it is, because that is probably speaking to the uptrend in gold not being sustainable. So here's silver futures. You got that peak in August 2020, which came at the end of a pretty epic 100 and nearly 50% bull market. It just took several months. So that was one of the best moves in silver of all time, really. But here you are, just the upper bound of this range is 35. I think you can lean on 30 or 29, that range, as support. But for now, the silver market continues to be range bound. Continues to pay to sell the rips and buy the dips. And I think that's the way we want to continue behaving until the market proves us wrong with that. I also like to point out the big base in silver futures when you zoom out too, because it's not just this short-term base that we were just showing there. But you can also zoom out to this 1979, 1980 peak when the Hunt brothers tried to corner the silver market. That did not work out very well for them. Let's look at quarterly candlesticks, get a little bit more clear picture here. So you can see that 50 really is the line in the sand for the silver futures. Over very long time frames. So if silver's above that 30 level, I think we want to bet on the path of least resistance pointing higher towards that $50 level. It's certainly not happening today, but I think over longer time frames, that is the bias we want to have. And then eventually, I think this resolves higher to new all-time highs, and we could see triple-digit silver sometime in the not so distant future. But today we're just range bound between that 30 and 35 level. But I just wanted to zoom out and give you all some context of what's going on in the silver market. And that was answering Jonathan's question. Let's move on to Gerber, who wants to see support and resistance levels for the DraftKings. So this is one of the publicly traded sports books. It currently has a $16 billion market cap. And this is one of those high growth, speculative tech stocks. I'm not sure what the current weighting is in like the ARK funds, but I know this has been a darling of portfolio managers like Cathie Wood. And, you know, it's had a good bull run the last few years, you know, from the bottom in 2022. This one's rallied about 400%. But let's see why this one's struggling here. So as we said, it had a pretty epic bull run, and then it found resistance at that 61.8 retracement level, which tends to serve as resistance. So that was no surprise at all. We had a nice little consolidation there. We turned the 38.2 into support after it was a resistance back here in July of 2023. We flipped it into support on numerous occasions. So this was a range-bound market, and then you came into 2025 pressing against new 52-week highs. You got the breakout for 1 week, and then the bears quickly stepped in, and they're actually trying to resolve this lower. So I think you want to use this pivot low from August 2024. It was a big time in the markets, as I'm sure you all remember. You had that, I'm not sure how much it really was the yen carry trade unwind as much as it was just a natural market correction. But if you want to blame the market correction on the yen yo-yo, then we could do that. Anyways, it doesn't really matter for this case, because this is the key level of interest right here. Let's see. So that comes in right around 28.5. So if this one's above 28.5, I think we can be buyers down here. I'm betting that this range holds, and you could potentially get a move back up towards that 50 level. So that would be a pretty sweet trade. Let's go 28.5 to 50. I mean, that's 70%. And, you know, this last move, when you bottomed there in August, it took what is that? 190 days. You know, that's not very long to make 70%. If you compound that over and over, you know, you're gonna be crushing it. So this really is a pretty attractive setup, and we only want to be buying down here at the 28.5. So you have a very clear out. You know, if we get a daily close below that, I think you want to be out of DraftKings. So you're risking very little for a very nice potential return. So I like that a lot. That's really all I see there with the DraftKings. Shout out Gerber for bringing that one along. I see Lazy Beats is in the chat, wanting to know my thoughts on Palantir. We'll get to that, but let's start out with Wavy, bringing along the BTG. So that's B2 Gold, and this is, I know it's on the smaller side of gold miners. We'll call it more of a mid-cap gold miner. It's $4.5 billion with 4 3/4 dividend yield. That's pretty attractive. You know, not a lot of these gold miners are offering that kind of yield. So this one is no surprise from Vancouver, Canada. So let's see what's going on with the chart. So this one, as you can see, it went public back in 2011. And as you can recall from that gold futures chart we were looking at earlier, that's right around the time that gold was peaking out in the last cycle. And I'd actually like to look at this one in relative terms too, Wavy. See what kind of leadership or laggard role this one's playing in the gold mining industry. And I think it's pretty clear that this one is not a leader. It's below that 2014 peak, which was the post-IPO pump. You had several years of uptrend there right after the IPO, but that has not lasted. You have resolved a very prolonged distribution pattern. So So this one goes from like 2016 to 2024. So that's about an 8-year distribution pattern. I can draw the big scary top on there. This is just not something that I look to buy. I don't typically look to buy big tops like that, especially when they take place over longer time frames, which just adds to its significance. Maybe I'll buy a top on a daily chart or something, betting on it being a failed top and they scoop and score it back higher. But this one has pretty decisively resolved lower, and I see no reason for this one to not head lower towards maybe this low from 2011 or even this low from early 2016. This kind of looks to me like some type of continuation pattern here. It's not all that attractive in relative terms, and GDX is not that strong of a benchmark. You have a lot of Newmont in that GDX, so it's weighed down by that pretty significantly, and you can see that BTG hasn't even been able to outperform that. In fact, it's lagged it tremendously. But I see what you're seeing here, Wavy. You have some type of primary trend reversal shaping up here. And that's great if you have a longer time frame. I think this one probably does end up going up in absolute terms, but I don't think that means it's going to outperform a lot of its peers. There's a lot of opportunities in the gold mining industry right now. You can pretty much throw a dart at any of these stocks and make money. When gold futures are screaming higher the way they are, it's pretty hard to lose money in these stocks. But here's what I'm looking at here this is a textbook bearish to bullish reversal pattern. You have a shelf of former highs you can trade against here from 2023 and 2024. So it's pretty stiff resistance right around that 3.5 level. And I also really like how that VWAP anchored to this 2020 peak is coming in right at that same level. You can see the market has respected that anchored VWAP on numerous occasions. 2022, you tried to break above it and they failed it miserably, and price collapsed. Let's see. You had like a 45% correction in just a pretty short amount of time. And then same story here in the spring of 2023. You tried to break above it and then they quickly brought it back down, and it ended up making new cycle lows. So I think you do have a lot of bag holders that are going to be interested in dumping at this anchored VWAP. But if the market proves that that overhead supply has been absorbed and this one can hold above this anchored VWAP, this 350 level, I like this a lot. Just in absolute terms, I think this one could end up at 4.25 pretty quickly if it holds this 3.5 level, which is a pretty nice trade, and it could happen pretty fast. So that's like a potential 20% move. I think it could happen in just a few months. And from there, I'd be looking at the 61.8 retracement. That comes in right around 5.5. You can see that was support back here after it resolved this initial top in 2020. So there's going to be some supply there. I'd be interested in selling at 5.5. But yeah, that's all I have on the BTG, Mr. Wavy. Thanks for bringing that one along. Let's look at Palantir now. Lazy Beats is interested in the Palantir. I see Bill in the chat asking about HL. I'm not sure which one that is, but we'll look at it next. Palantir though. So this is, I think we all know the Palantir, $200 billion. It says it's packaged software, but they're really interested in selling software to the government. It seems to be a pretty amazing business. They currently have a 490 PE ratio. Not sure if that's the right fundamental metric to be looking at, but that kind of speaks to what you're dealing with here. Is it's a very high growth company, and the market's willing to pay up for their current earnings because they expect that earnings number to continue going up. So what we're looking at here is Palantir went public back in late 2020, had a nice little IPO pump. It rallied about 400% in a few months. That was a pretty great trade if you got it. But after that, it peaked and it suffered about an 87% drawdown. It bottomed in December of 2022, right when a lot of tech stocks were bottoming. So it was a very important time in the market for technology stocks in particular. You know, the S&P bottomed in October of 2022, but tech stocks continued to make new lows into the end of 2022, and then they really reversed hard in 2023. I think the NASDAQ 100 had its best first half to a year ever in 2023. It was a pretty extraordinary time to own tech stocks, Palantir very much included. So from that late 2022 low, Palantir rallied about 2,000% this cycle. It was one of the best stocks in the entire market. It was awesome. It went on to hit 2 Fibonacci extension levels, and that's where we are today. So let's zoom in and get a little more tactical with it for the lazy beats. So what I'm looking at here is this VWAP anchored to the February 18th peak, which is the all-time high. And they didn't spend a lot of time up here, so there's probably not a whole lot of bag holders at this 120 level. So I think your bias should be to the upside. Let's fib out this range, and we'll change the color, make it a little easier to read. And we need the retracements on here. And so yeah, I love how this VWAP anchor to the all-time high coincides with the 38.2 retracement of this entire range. So that just really adds to my conviction in that level. You can see that the market gapped above there on the week. What was that, last weekend? The weekend before? No, I think that was last weekend. It closed right at that anchored VWAP, and then it gapped above it on Monday. So the bulls are trying to take back control of the short-term trend. Like, you really want to, if you're not in it right now, I think buying this dip towards 89 is probably the move. You have a really clean and clear out. You know, if this 89 level doesn't hold, I think you want to be out. So you're risking very little to potentially make, what is that, 35 points, which is like 40%, and that could happen awfully fast. So I really like this one and how it's shaping up over short time frames. Maybe you need to come down here and carve out some type of right shoulder. You know, maybe this is the left shoulder. Let's draw it out here. So left shoulder, and then you have the head right here. This is the capitulation right here. And then maybe you need to come down here and correct a little bit more. Maybe it just spends several weeks here, maybe a few months, who knows? But it looks to me like the market wants to come back to this level and consolidate a little bit more, put in a little bit more shape before it works its way back towards this all-time high. But I think that's ultimately where the market wants to take this one. I think if you're not interested in buying the dip, also you could look to buy this one on strength. I think that is potentially an even better strategy, a lower risk, but you also have less potential reward. If you buy this one on strength above 100, that big round psychological number, I think you could have pretty high conviction in a potential breakout above there. I think that would have a good chance of bringing you back towards that 125 level. And that's really all I have to say about Palantir. I think let's look at the 14-day RSI. I think this just kind of affirms what's going on here. It's just a range-bound market. You're not really getting close to overbought, but you're also not really getting close to oversold. You're just dancing around this middle line, consolidating the prior uptrend. So I like this one a lot, but I think it's due for a little bit more dancing here. So let it dance, lazy beats. And let's look at the Hecla Mining. Let's finish with this from Bill. Shout out Bill for bringing along a little gold mining stock. So we were looking at BTG earlier, which was about 4.5 billion in market cap, and this one is just below 4 billion. It's about 3.7 billion dollars in market cap. And let's see, is this one from Vancouver also? No, this one is from Idaho. Okay, shout out Idaho. So like we did with the BTG, let's look at this one relative to the gold mining industry. And as you can see, this one is also not a leader in the gold mining industry. This one is making new 52-week lows in relative terms. You resolve this pretty prolonged distribution pattern relative to the GDX. It looks something like this. I'll make it a little red, a bit more scary. Here you can see that the market bottomed here in the summer of 2022, and again in the winter of 2023 and 2024. This is a very well-defined level of interest, and the market pretty decisively brought this one to new 52-week lows. So this does not scream leadership. This one's actually a laggard relative to its peers. So with that information going into this, I think we don't want to trade this one over longer time frames. I think given its laggardship, we want to trade this one with a shorter time frame. And so we're in the middle of just a ginormous range, big picture, giant mess, sloppy, super sloppy. And so I think you can just trade this one just like this, with daily candlesticks. This is how I would look at it. So I would drop the VWAP from this October 22nd peak, little shooting star doji reversal candlestick. That was a very important reversal. And I'd fib it out, and that looks something like this. So I think the 61.8 retracement is the line in the sand. Let's just get rid of this VWAP and the 38.2 retracement. Ignore all of this action. This is just one big base, big accumulation pattern, big launch pad, whatever you want to call it. The structure here is bullish, but with a very short-term neutral pattern. This is a range with potential bullish implications. And I think this is really the level you want to trade against. So you flirted with a breakout above the 61.8 retracement back in the middle of February, and then the market just failed miserably there. So it was an earnings report that sparked that negative reaction. So this was a negative 14.5% day for the HL. And let's pull up on my other screen, I'll pull up their earnings reactions over time. And let's see. Yeah, this was one of their, so this was the worst earnings reaction since August of 2020. And that was not a great time to be buying precious metals. We were looking at the silver chart earlier, and silver peaked back then at around August of 2020 after a pretty massive 150% bull run. So that was a pretty bearish time in the markets. So So not only do we have relative laggard, we have that box checked off, but we also have the fundamentals are not great here. The market severely punished HL for coming out and reporting earnings. So I don't love that also about it, Mr. Bill. And so after all that, if you're still interested in trading it, I think you can buy this one on strength. I'd only buy it on strength. I wouldn't really be interested in buying it while it's still in this range. But if you can get this one above 6.5, I think you could have a trade from there back towards that key pivot from October 22nd of last year. So that's a potential 20% upside. It could happen pretty fast. But I don't think there's anything to do here as of today. Maybe it's a setup where the market closes up here like it did before the last earnings report. And maybe this next earnings report on May the 7th is the catalyst to spark a move above this level. But also, I don't think you want to be front running that, because it very easily could be a nasty earnings reaction like we saw on February 14th. So I think this one, it warrants caution over the short term. I think you want to see this stock prove it to you, prove that it's ready to get out of this range, because until it does that, I think you want to bet that this range continues to hold and that buyers and sellers are just going to be whipped around. And that's really not something us traders want to be involved with. If you're a longer term investor, I think these big messy ranges are great for accumulating, but I don't think that's the majority of us here. And Bill said thanks in the chat. You're sure very welcome. And I think we should finish off with one more. Let's look at ADMA from H. We'll just look at this real fast. A little biotech. I know this is one of the strongest biotechs in the market. This one is, look at this. So consolidating above this shelf of former highs. So you got the IPO back in October 2013. Then you pumped it about 100% before a massive, nasty drawdown. You have reclaimed that level. So that is a huge level. I think the buyers will continue to defend this former resistance, now turned into support. So 14 is the line in the sand on the ADMA. But I'm really more interested in buying this one on strength above that 22, Mr. H. Chan. If this one can get above that 22, you're probably looking at 35 in not a lot of time. This last breakout, it took about, 2 months to get 60%. So I wouldn't be surprised if it took 1 to 3 months to get from 22 to 35. So I like this a lot. Definitely. Shout out for bringing this one along, H-Chan. One of the best looking biotech charts in the entire market. And that is all I have for you all today. I really appreciate you all being here. If we didn't get to your ticker today, throw it in the mailbag. Email us at questions@stockmarketmedia.com, and I will be sure to get to it next week. We'll be here next Monday, same time, same place, 1 o'clock Eastern time, and we'll run this back. I appreciate you all being here, and we will talk again soon. Adios.